With that being said, why don't we get started? So today we will be talking about tackling taxes. We just had the Super Bowl last week, so what's tackle debt like the Buccaneers defense against Patrick Mahomes. So let's get started. Um, a little bit about us at Fair Credit. We are a 501c3 nonprofit organization, and it is our mission to help individuals and families with their finances. And this is one of the ways that we do it. But some of our other services, we offer one-on-one financial coaching where you can work with one of our wonderful financial counselors who are certified to help you with with your financial needs and work towards your financial goals. We have our debt management program where we can work with you and your different creditors for your unsecured debts to come up with a payment plan to reduce the monthly payment and the interest rate on some of those to make it more affordable and help you get back on your feet. Following that, we have our IDA or our match savings account where we can work with you to help you achieve some of your goals if they include going to school, buying a home for the first time, or even starting a small business. We are here to help with that. And again, our contact information is going to be at the end. So feel free to give us a call, email us, reach out to us via social media. We'd love to be able to help you out with some of these. We have our financial education beyond what is being presented today. And our last program that we'll touch on is our payday loan refinance program, or our Credit Gazelle program is what it's called, to help you refinance some of those pesky payday loans. Again, if any of these services intrigue you, please reach out to us. Our contact information will be provided at the end. Just some housekeeping rules before we really start tackling those pesky taxes. If you aren't sharing or speaking, we'd ask that you mute your mic. Then if you do have questions along the way, please feel free to put those in the chat. There will be a Q&A session at the end, though, for you to ask your questions. And again, we are recording this webinar for your benefit, for the future of others. And with that being said, why don't we get into today's agenda? We'll first hear from our counselor, Mackenzie. She'll talk about some different ways to use your tax refund in a more productive way. Then we'll turn our time over to Greg, who will really dive into the strategies and the game plan for tackling your taxes. And again, we'll follow up with a question and answer portion of our meeting today. So with that being said, Mackenzie, I will turn the time over to you.
Awesome. Thank you, Talon. So we're going to kick it off with a little clip from one of my favorite movies. So we'll start off with that. This is the Disney's Robin Hood.
Taxes! Taxes! Beautiful, lovely taxes! Double the taxes! Triple the taxes! Squeeze every last drop out of those insolent musical peasants.
So taxes can sometimes be a daunting thing, and it kind of seems hit and miss whether for some, it's something that we all look forward to, and then for others, it might be something that they dread at that time of a year. So today we're going to talk about, on my side of things, rewarding ways that we can use your refund. I recognize that not everyone may be getting a refund, but if you are getting a refund, we're going to discuss 8 rewarding ways to try to use those refunds. So before I dive into the 8 different topics or 8 different ways, I'm going to launch a poll And it's going to be a multiple answer poll in that you can say as many or multiple choice as many things as you want that you are planning to use if you are, or if you were to get a tax refund, what you would use it for. So go ahead and submit your answers, and then we will just kind of see what a majority is saying. Give about 20 more seconds to go ahead and put your answers there in the poll. Okay, Talon, will you go ahead and launch the results? Okay, so how do you plan to use your tax refund? It looks like a majority of the audience is planning to put it towards something specific that they're saving for or pay off debt. But then second to that, we have the create an emergency fund and vacation, followed by schooling, funding the retirement, and then investment. So we've kind of got a variety there. And these are the different topics in which we're going to discuss. So we'll go on to the first one, which is the emergency fund. Nearly about 25% of Americans don't have an emergency fund, which is a really scary thought. So if we were to have, any one of us was to have something come up and we weren't able to pay for it, what would we then have to do? Most likely go out and take some debt or take on some debt. So it's important for every household to have some sort of an emergency fund. Most financial gurus are going to recommend that you have 3 to 6 months of your monthly expenses saved, which is a great goal to have. But if you don't have any emergency savings and you're starting from scratch, my best recommendation would be at least to have $1,000. Most emergency or unexpected expenses fall under that $1,000 realm. So if you have at least $1,000 set aside, that's a good starting point. If you have a home or if you have dependents, you may want to consider having more than $1,000 saved, just knowing that those having a home and dependents can also create more emergencies or unexpected expenses. One other recommendation, some people really struggle to not tap into their emergency fund when it isn't an actual emergency. So I would recommend putting that emergency savings in a different, possibly a different financial institution than that what you have your checking. So it's not always an easy transfer of a click of a button, or maybe try to have it in such a way that you would have to only withdraw the funds instead of having the option of transferring. And if you are one who does struggle with that as well, we do have a specific program at Fair Credit Foundation that might intrigue you. That is called an opportunity account, where we, in partnership with a local bank, have the opportunity to help individuals put aside certain money, or they're able to save their money in an account that would make it so they're working with a financial coach to help them reach that specific goal. And the funds are only supposed to be used for that goal. So they'll have kind of the guidance and the help of a counselor to try and keep them on track for that for the funds that they have in that. So that's an opportunity account. Feel free to reach out to any one of the coaches and at the end of the presentation with our contact info if you are interested in that. So that's the emergency fund. The second rewarding way to use a refund that we're going to talk about is paying off your debt. I think that was on the poll a very big one for a lot of people. And when we have extra money, it's an awesome way and such a rewarding way to go ahead and pay a little bit more off of the credit card or off of the auto loan or off of a student loan, whatever kind of debt that you might have. As Talon mentioned at the beginning, we do have a service as well that is known as our debt management program that's used for unsecured debts to help people pay off debt faster. So that's something you could explore as well. But it's really tricky and hard to say, okay, well, I'm going to put all of my refund into a savings that yields 1% when I have an 18% interest rate credit card that is keep compiling and getting are compounding and getting bigger and bigger. So it's really important and smart to evaluate, okay, what is going to be the best way to use my refund and the most rewarding in terms of getting me to my next goal. So that's paying off debt. Then the third rewarding way is exactly what I just mentioned of savings, but putting it towards a specific savings, which would be funding your retirement. I am not a financial investor, or not investor, a financial planner. So none of us at Fair Credit are financial planners, but we are financial counselors and can help you to navigate, how to best allocate some of your refund, or like help you to kind of look at your situation. But when it comes to giving advice in regards to retirement, we would definitely send you or refer you to maybe your company that you work for, or a place that you might be able to dive in deep about more long-term goals when it comes to your retirement. But what we can say and what we can do is educate you on the idea. So it's important that you at least think about your retirement and what does your retirement look like. And if you don't have any sort of retirement, it would be important to consider thinking, okay, what can I do and where can I begin? You could use part of your refund to start or to feed towards an IRA, which is an individual retirement account. And you can put up to $6,000 a year into that personalized retirement account. Or I think if it's above the age of 50, you can add additional 1,000. So upwards of 7,000 if you're closer to that retirement age. So that would be an IRA, or of course you could add it to a company funded 401k if you have some of your funds monthly income going towards something like that. Okay, now let's talk about the other hot topic in regards to the poll, which was just putting it towards your savings. Maybe each one of you have something individual that you're saving for, a down payment on a home, a future vacation, or possibly even starting a business or buying a car. This is such a great rewarding way to think and see your refund go towards something in the future that you're hoping for. So again, if this is something that you struggle with doing, putting money towards a savings without touching it, please reach out to us as financial coaches. We'd love to be able to help you, not only help you set those financial goals, but find out what some of those barriers are in keeping you from keeping those financial goals. So that is putting your money towards savings. The next rewarding thing we're going to talk about is seeding the college fund. So if you are looking to go back to school, or if you have kiddos or grandkids that are in the age or getting closer to the age of college, maybe you possibly should consider seeding and starting a college fund for them. You could consider getting something called a My 529, which is a college specific savings fund that can go towards college expenses at the age or the age in which the child becomes 18 to go to school. So these are things to consider is, okay, am I going to be going back to school, maybe to grad school in the future? Or you could consider, hey, I'd like to put a portion of my tax return to funding my grandchild's education, and I'm going to start up my 529 for them in behalf. So these are all things that you can consider to do, and of course, very rewarding, even though it may not be a reward tomorrow. Okay, the final thing that there's actually a couple more, sorry, I'm getting ahead of myself. So the next one is making a home improvement. So if you're a homeowner, and I don't know, I purchased a home 2 years ago, and I feel like my list just keeps on getting bigger and bigger in regards to the things that I want to do. But they're things that I want to do. They're not necessarily things that have to happen. And if you're like me, you could put a small portion of your tax return to something like this. Do you need to put a new front door in that would keep your house a little warmer and cut back on the heating cost? Have you been wanting to paint a certain room? Have you been wanting to install some shelves in the bathroom? Whatever it might be, you could put a small portion of your tax return to helping you see a home improvement, and that would feel very rewarding. And yeah, okay. The next one is preparing for the future. So we kind of already spoke about this in the sense of retirement and as well as college. But this one I was specifically thinking more about, are you in the immediate or near future going to be adding a member to a family? So for example, childbirth, or are you going to have LASIK, or are you going to have a shoulder surgery done? Are there some in the near future events, and more specific, I guess, to medical, that you would need to be saving for? Or even if you don't have something specific that you're planning on, but you know that you have a higher insurance premium, or even in the aspect of car insurance, so we're not even just talking about medical. If you know you kind of had the lowest tier in terms of a car or in terms of medical insurance, having a fund that would be prepared for if and when a car repair happens, so more of an emergency type of scenario, or specific to something like getting LASIK, or to a childbirth, or to a medical surgery, if you have the option or are currently participating in a work FSA, flexible savings account, or a health savings account, you can contribute more to that, so that you're better prepared for those future expenses, whether they're planned or unplanned. So consider and think about that as well as another way to use your refund. And then lastly, the last one I want to discuss is to surprise yourself. I'll never forget, I was working with a client at one point where they had filed multiple tax returns that they were behind. So they were getting 2 or 3 years worth of a refund. And the discussion, the list, the 8 rewarding ways that we talked about today, I'm sure every single one of us could come up with something in one area of those, or that we all want and we all need to do something in every single one of these areas. So it's important for you to not try to get overwhelmed, but to try and choose 1 to 2 to maybe 3 things that you could separate and use your refund for these things. And one of those, I do recommend to have it be something that you can give back to yourself, to surprise yourself. Now, when I say surprise yourself, that does not mean you need to go out and get a Tesla and to take on more debt, but, oh, I used some of my tax return for that. Definitely not. We don't need to overdo it, but we can surprise ourselves maybe by going out to dinner, or to having a night out on the town, and giving ourselves $100 spending spree that we can go get some new clothes, whatever it might be. Definitely let yourself give a little spark or surprise, but don't overdo it. And make sure that you can seed a college fund, or that you can make a home improvement with this extra cash that we don't have access to often in any other point during the year. Okay, so the next slide. Oh no, but I owe. I didn't get a refund, I owe. So this is when it is time to tweak, potentially to take some time to tweak. And what I mean by that is to evaluate how you have your W-4 set up, and see if maybe you don't have enough being taken out for your taxes. And you can use the IRS tax withholding estimator that they have on their website to kind of get an idea and calculate out some of those things. If you do owe, you can set up and you're not able to pay up front, you can set up an affordable payment plan if you're unable to pay them all up front by the due date. So make sure that you not only thinking about how you can take care of it now, but also how you can take care of it in the years to come, so that you aren't constantly having to owe. Or if you know you're going to owe, make it so that you can plan for that throughout the year. So for example, my parents no longer have a mortgage, their house is paid off, but like any other property, they have property taxes that are due at the end of the year. So what do? They plan throughout the year and take a little bit of money and put it aside for those property taxes at the end of the year, because they're expecting and know that they're going to have to pay that. So if you have a business, or if you know that you have, you're going to have to pay taxes from year to year when it comes to income, and or that you're going to owe, make sure that you're kind of planning ahead for that, or evaluate and see if there's a way so that you don't have to do that. And then again, think about your budget, like I mentioned. So if you know you're going to, maybe you make a plan in regards to that. And we would love to at Fair Credit help you evaluate and look at your personal or household budget to make sure that those kinds of things are prepared for and planned for. Okay, now we're going to talk I'm going to briefly go over some facts on tax. So you can split up your tax refund to up to 3 accounts via direct deposit, which includes even retirement accounts. So this is an awesome thing regarding, our 8 rewarding ways that we talked about. So you could put, what X amount towards a surprise for yourself and have it go to your checking. You can have X amount go towards your retirement, so that some of that is going there, and then you can have X amount go towards your down payment on your home. But you can have it split up to 3 different ways. And if possible, they are recommending that you do direct deposit, as it will, you will receive it more quickly, is what I'm hearing, especially as we've kind of seen that with the stimulus checks, that if you had your taxes set up to direct deposit, people are having less complications when it's set up that way. Tax date is April 15th, 2021, unless for whatever reason they extend it. Keep your tax information organized and together. It's recommended that you keep all documents at least 3 years. I think even more than that is safe and probably better. But keep your tax information organized and all together. I have a little spot on my computer that I keep all of my tax, year by year, and then all the paper documents. I have a little folder I bought from the Dollar Tree that I just keep on my shelf. If you know where you can always find those things, it's very helpful when it comes time for tax season. After filing your tax return, you can actually use the tool on the IRS website called Where's My Refund to watch the status of your refund. So you can see if it's been accepted or sent, and kind of get an idea as to the timing of your refund. And the last thing I'm going to say is, don't be afraid to ask for help. A tax error can be really, really pricey. I will say this, I have actually had a crazy tax experience. Me and my husband both, I'm no tax guru. Here I am talking about the refunds. I can talk about personal finances, but when it comes to taxes, that's why we've got Greg here today with us. But I will say this, when we filed online, me and my husband on our own using, like a third-party service like TurboTax, it was like around July, we hadn't seen our tax return or anything like that. We had actually gotten a letter from the IRS saying that we owed $30,000 in taxes. And I was floored and I was above myself, because I'm like, holy cow, that's like an annual income. We don't have that. We can't do that. What kind of mistake happened? And we were able to reach out. If any of you have ever tried to call the IRS directly, it can be very taxing. It can be a long or it can be a long wait to get nowhere. So it's important that you have somebody that you feel like you can talk to. And that's why we have those resources that are out there. And we actually have one of those resources here with us today. So please, please, please don't be afraid to ask for help, because there are resources out there to help us. So with that being said, we're going to turn the time over to Greg McDonald, who I'll let him introduce himself and what his role is over at Utah Community Action.
Okay. So my name's Greg, and I've been doing taxes for 18 years, and I work with the VITA program. We are with Community Action Partnership of Utah, and that means most people think of us as Utah Community Action down there on 13th South and 9th West. but we're the state association. So we are looking at, there's 4 of us in the organization, and we're making sure that all the AOGs and the local community action partnerships have the right training, are meeting the standards, because they do a lot of federal grants come in. To be honest, UCA is a nice large group. They are able to survive on their own. But some of these rural CAPs, some of these rural AOGs need our help. Now within that, we have the VITA program. The VITA programs have been around for 50 years. In Salt Lake, it's been around for 20. Is in another form, it was with the IRS. And the IRS over the years has had to let more and more of that go. So the IRS trained, ran it, supervised it. In the early days, IRS agents used to do it with some colleges. And then as the IRS, in case you haven't heard, they get their budget cut every year. And they really have for the last 10 years. So as they've gotten their budget cut, they've had to let more and more go. So like I said, we've been around for over 20 years. I've been doing it for 18. I was just a volunteer. My wife was part of the group that got this started, at least for the community, and just decided to become the regional coordinator for Salt Lake because we were having a lot of issues with some of our coordinators. And then we became the state. I became the state coordinator. Now we are, as of April 1st, we'll become our own little group called Tax Help Utah. And can I share a screen here? Do I have permission yet? Yes.
You should have permission now.
Okay, now, I've been on so many Zoom meetings. I need a favor. Are you guys seeing the shared screen, Tax Help Utah? Are you seeing my home
Yes,
screen?
sir.
All right. So let me take this computer out of the way. So this is Tax Help Utah, brand new. Like I said, we're going to be April 1st, but we've kicked off the site. We have 3 ways to do taxes. And we have, if I include my colleges, we have about 900 people across the state of Utah who are doing taxes. So we have community tax help. We have colleges providing tax help. We have some corporations providing tax help. And we have a lot of host sites. And, whenever you go to a site like this and you say, who are your partners? We have pages of partners because we have so many host sites in every type of government. We're there, except for this year with COVID, because now a lot of the host sites are going, we're not opening, and a lot of my volunteers are saying we're not coming out into the public until I have both my shots. So we're very, very limited in what we can offer, where most of the time we would offer in person. That middle one is virtual one-on-one. And then the first one's DIY. Now I'm going to take you through the formal 1040. We'll talk about it a little bit. And then I'm going to take you through an actual return, because some of the questions that have come in before this meeting, I want to show where they fall on a tax return, just get used to being comfortable. Talk about some tax law changes, the EIP/recovery rebate, and who knows what we're going to call it when we pass the 3rd one. I'm going to show you, I can't find a good one, a portion of an IRS letter. So like Mackenzie, I didn't have 30,000 Mackenzie. I didn't do that bad. But in 2013, I got a letter saying you messed up on your 2010 return. And I kind of jumped in and just said, right away, no, I didn't. So get the 2nd letter. No, I didn't. 3rd letter my wife got and said, open up the return. And yes, I did. And we'll talk about that. We'll talk about how to respond to these IRS letters. Everyone calls them audits. They're not audits, but we'll talk about that. And then, questions, but I would like, I don't know how to do this on chat, like interrupt me, like maybe every time I finish a segment. So VITA is the same as AARP, who's also very limited in what they can do and offer. So we have a lot of scrambling. Like in Salt Lake, I would normally have 10 tax sites. I'm down to 1. It's at Sorensen Unity Center. And we're doing a drop-off scanning. So I'm going to hold up a sheet. You don't need to see it. But if you've ever been to a VITA site, we have an intake sheet, IRS. We fill that out. And what we're doing at this site is we'll talk to you. You bring all your documents in. We're going to scan them. Then we're trying for a week, but this is a new process. And the more volunteers as they come on board, we'll get down to a week. But we scan it, then somebody remotely does your tax return. Somebody else remotely does your quality review, because we always check every return twice. And then we'll let you know through email and just saying, hey, it's ready. This is here's some data. If you approve us to send it in, please just send the email back saying yes. That's on the in-person site at Sorensen. So we have the opportunity to do about 100 of those a week. And VITA overall in Salt Lake, in Utah, does 20,000. So we know we're going to be down this year, so less opportunities, unfortunately. The only real in-person sites are down in St. George. Well, they called 5 County, that area. SUU has some in-person, Dixie has some in-person. Nothing north, nothing until we hit very southern tip. So everyone's doing something differently here. Ogden, for instance, is doing you drive up, they have a U-shaped driveway, you're driving up, they come out, they get your stuff, they hand you this intake sheet, you're filling it out. They take everything, they copy it, they give you everything back, and you drive off, and somebody's going to call you, and they're going to review that intake sheet with you. Same thing with Tremont and Logan. And part of Utah County is doing a drop-off scan where you'll scan it one day, and 2 days later you'll be with someone on Zoom. And then it's 6 County, which is, let's say, call it Richfield. They have boxes. Drop off all your information in this envelope, a list of what you have to drop off. They pick them up every day, deliver them to volunteers. So everyone's scrambling to serve as many people as we can. And it's just a different scenario. So I ask my volunteers to be flexible, and I ask clients to be flexible. I really ask the IRS to be flexible. One comment Mackenzie made is that it's going to end on April 15th, and everyone asks if we're going to extend it again. The IRS has years of history of let's say week 1, we expect this many returns, week 2, this many, week 3, this many, week 4, this many. And if they're not getting them, they'll probably extend the season, hopefully not till July. I'm going to have volunteer burnout. My volunteers keep coming back, which is great. Like we have over a 90% retention rate. Now the college kids, they move on, but the community volunteers, they come back. So nice process. Things have changed for everybody. But the thing I want to get across to you today is I don't want you to, take a little bit of fear away from taxes. So I didn't know this until a couple of years ago. My mom's 97. She was telling me in the 60s, they got audited. My family got audited. And she went in and they're going through every little piece of paper. And this was a paper return. Everything's paper. Nobody did it. We didn't have a computer, so we didn't do it on computers. And there was one thing that they claimed was like for $50 donation, and they didn't have the paperwork. And the guy, oh, we can't claim that. And the guy was like, I think my mom started crying. And the guy goes, what are you getting upset about? Don't cry. So it's that thing that we all have this fear of the IRS. And then because we have a fear of the IRS, and we grow up with a fear of doing taxes. We think we can't do it because it's an unknown thing. Unfortunately, we're way behind on teaching this. I think it's a skill we should have coming out with budgeting, coming out of high school. And we're getting better, but we're not there yet. And some schools, specific schools, are really good. So we have this fear, and we have this thing unknown called tax returns. So we're a little bit nervous about doing it. And I see people my age who never had a job that required them to work on a computer, don't have a reason to have a smartphone, so they're still on a landline. And they don't want to, I don't want, why at this age should I be learning new technology? So then you multiply, I guess, that fear by a factor of X. So right now, Utah does 1.4 million returns. And that's for Utah. And 90%, actually 89.2% of them are electronically filed. And as you saw, as Mackenzie mentioned on the EIP, how you filed your return is how you got your refund, unless you took some steps to load up a bank account or updated. So again, we'll talk about that later. The unfortunate thing, which we have a history of doing, we, IRS, have a history of doing, is we rename things. So we went from an EIP for the first rebate. Now we're calling it recovery rebate, and most of you call it the stimulus. So when we were looking at March for passing that package, which might get us another 1,400, nobody's promising anything. It looks like they're going to leave the age and income requirements alone as they've been. So I think the biggest change we might have seen is that the first go around, out of that 1.4 million tax returns, 1.3 million were eligible for EIP. Out of the 1.3, everybody got a paper check, a direct deposit, and 1,500 people got a debit card. And I'm going to guess the second go around, a lot more people, if they had a paper check, got that debit card, because they got everything out by January 15th. And so they got everything out in less than 3 weeks. So they're moving fast on that. It's still a big issue, and we're still missing about 65,000 people eligible for EIP, recovery stimulus, that did not get it yet. So let's get into tax returns. So if you wanted to find, I'm sorry, let me do one last thing. If you want help, we go, okay, I want to go in person. I want to go find a site. I want to go select a county, and I'm going to use Salt Lake. I'm going to go search. Now I'm going to come in here and I'm going to see, oh, wow, I used to have 10 sites. I used to go down to Midvale Administration Building. I used to go down to South Jordan Senior Center. I used to go to Salt Lake Community College. I used to go to Northwest Rec, the senior center up there. So yes, there's only one open right now. And again, that's a combination of how many host sites are open and how many volunteers want to come out in the public. So you can see now we're out to March 3rd. This is filling up quick. But you can see the openings here, and you just sign up. And when you sign up, it says create login, but that's, at one point it did have a login, but it's not. First name, last name, email address, state, date of birth. And there's a reason for that. There's HIPAA laws, and there's this thing I just found out about called COPA law. So we need that date of birth. We need that email if you have it. And you make your appointment, okay? If you come back and you want to know virtual, so Salt Lake's doing virtual, or doing them all over the state. So we are really just starting this. We've had 2 Saturdays. We're going to open this up for appointments at some nights. We're going to open up more Saturdays. The appointments we already have open, we have filled, but that is, you stay at home. You get on Zoom, we do your appointment, you're done, in and out and about. The worst case, I think, on Saturday is 2.5 hours. And if you've been to a VITA site, one that does walk-ins and appointments, it's a crazy mess, and it might be 4 hours, 5 hours. It's a little bit quicker, but that's new. So 3 options for us, but also EITC calculator. I have an MOU with the Center for Policy and Budget Priorities. I think that's what it is. And their MOU is, we just want to go estimate my credit. This is a lot quicker than the IRS. IRS, you have a few things, many more things to fill out. And I just put in my filing status. I'm single or head of household. So put that in there. EITC, if I'm single, cuts out. Think of it as EITC, Earned Income Tax Credit, as a MESA. The more you make, starting at $1, the more you get. And there's a sweet spot. It's flat. That's your MESA, the top of it. And then as you get to the income out area, I call it, it goes to 0. For a single person, you're back to 0 at 15,600. Okay. The sweet spot, the top of that MESA, is around 8,000. But I put 2 kids in there. So I'm a single dad with 2 kids, and I'm making $30,000. And you can see what's happening at the bottom. It's giving you my EITC. All right. So that's how quick you can find your EITC calculator on this site. And it's much, 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 much quicker than the IRS, because I was going to put the IRS connection here. And it's, you gotta go to the IRS site. You gotta fill in all this stuff. And it's next page, next page, next page. This is one page. Click, fill this in, done. That doesn't even talk about child tax credit for those 2 kids, which can get you a lot more money. So anyway, that's the tax site. Okay, Tax Help Utah. Now, there have been changes this year, not as dramatic as what happened 3 years ago with 2017. So when we put the big tax law changes in 2017, all our people back in Washington were woo-wooing and look at us. And somebody actually had the nerve to get up with I'm looking for, like a credit card type thing and said, we're going to get you there. And what they did was explode the 1040, which used to be 2 pages. Now it's 2 pages and 3 schedules. So they made it into 5 pages. And to be honest, the first year it was 6 pages. So they all took credit for moving things around. I wasn't impressed as a tax person. I went through 200 returns that were at various sites, just random. And we had some way above our income limit of 57,000 because I led volunteers, like you can do friends and family. So, one guy had a neighbor who had a really good job, so retirement, pension, everything. And that couple was going to be impacted by the tax changes by a lot, but they were ready for it. But I was really looking for the people that we truly are here to deal with and help. And nobody got hurt, but people would get hurt when their 16-year-old child aged out of child tax credit. So the closest couple was $9 a head. And most people came out okay, but I could see the child tax credit creating an issue. And if you ever heard of or aware of Marco Rubio, he's the one that changed the child tax credit the last minute. And that's what they're talking about changing again. But if it wasn't for his input and getting that change in, we would have seen a lot of people with child tax credit come out worse with this new tax change. So here's our tax return. Simple. They want to know who you are at the top. They want to know who your kids are. This is all the different kinds of income here. And there are other kinds, but there's lots of other kinds. These are essentially the big incomes. And you go to other pages if you have incomes. Let's see, line 7, capital gain or loss. We have business incomes. Here's that charitable contribution, something new this year. We'll talk about where that goes, how you find it. Then we have something called adjustments to income. We'll talk about that. And then we have your standard deduction or itemized. Now, one of the things with the 2017 tax law change is that out of that 1.4 million tax returns that Utah sees, 415,000 would itemize. And then now we're down to 205,000. So we've cut that in half, but that's good. I mean, it's okay. It doesn't change how that affects your return. But when we ask people, they're going, I never itemize. What's that mean to me? And I just want to look at over here, if you can see it. Like, if I'm married, I have a standard deduction of 24,800, and itemization is, I could use it if I have deductions above 24,800. And those deductions are going to mainly consist of, let's say, tithing to a church. I have a mortgage, pretty hefty mortgage. I'm paying my taxes, real estate taxes, I think Mackenzie mentioned, or her parents had to pay. I got to pay it too. And your charitable contributions, and then if you're unfortunate to have pretty heavy medical. All those have to add up to above the standard deduction. Then the computer gives you whatever in your favor. Okay. So it's your income minus your standard deduction usually equals your taxable income. Any questions? I'm going in a chat. Okay. So who's having trouble seeing? I'm getting mine and no issues and some issues for seeing my screen.
I think we got the issues resolved.
I know I can't do anything.
No, you're doing great. Thank you.
You're seeing my tech limitations right now, folks. I'm sorry. So now the taxable income. So I always look on it as if this standard deduction thing, we talk to you about the itemized deductions, but again, the computer gives you what's ever in your favor. So trying to think, I had a client, and this is years and years of experience, folks. I had a client that both he and she had major medical, and you could tell that they had major medical before, because they had a notebook, and each page was a month of medical. They were tracking their miles. They knew what to track. They Googled, we went here for our prescriptions. We went there for all our doctor appointments. And that was fantastic. You don't want to see people like that because, they have major medical issues. But the tithing is, you're going to get a form from your church. It's going to tell you how much you gave. And then you get a form from your house, your mortgage company. And it's going to have your real estate taxes on there. It's going to have your PMI. And it's going to have your interest. And usually when you have a mortgage, not usually, when you have a mortgage, it's heavy interest on the top, and then as you pay it off, you're paying off more of the principal. So in those early years, you can use it. So we put them in. We don't make a guess. We just say, hey, you're kind of close. Let's put all this in, and we'll let the computer, the formula, decide it for us. And it's going to be whatever is in your favor. But it's a nice discussion to have, because itemization, as I said, we used to do twice as many as we do now. So we come to your taxable income, and taxable income is essentially your income. You already paid taxes out, whatever you paid out of it. It's your wages for the most part. It could be business income minus the expenses. It could be IRS distribution, could be Social Security, but all those things are called income. Unemployment is called income per the IRS. All that stuff gets added in, then minus your standard deduction, and whatever's left, they're going to give you, that's your taxable income, and they're going to give you a tax rate. And the lowest tax rate is 10%, and Utah's a flat 5%. So if I'm single, I'm going to try to make this easy on my brain. I'm single and I make $30,000. I see that my deduction is $12,400. That means my taxable income $17,600. And I'm going to guess, looking for my calculator, that's going to be a little bit above 10%. Let's say it's 12%. My taxable income, what they're looking for from me is $2,112. Now, they have not looked at any credits. They haven't looked at what I already paid. I've been paying taxes every year. So I call it just the tax liability. So it's a taxable income, and then it goes right out to the computer and says, okay, this is what you owe us. And that would be $2,112. Then it starts looking at the credits. So if I use an example that, let's say that parent I use with the two, to find that EITC, so I'm a parent with 2 kids. Well, then it's going to look at child tax credit. And child tax credit, that when I mentioned Rubio, what he had done, the old child tax credit was $1,000. Now he's moved it to $2,000. And he did that. I mean, this thing was passed. It was like ready to be gavelled. And he came up at the last minute. I don't know who got to him, but they changed it where it was $2,000. And that's what made all of these people I was looking at, they were still like coming ahead of the game with that tax change. They wouldn't have, most of them wouldn't have without that change. Now what they did was they said, we're going to make it $2,000, but $600 of it is non-refundable. And this is getting deeper into taxes, but we have credits that are non-refundable. So this person has a tax liability of $2,112. So at $2,112, we want to look if he has any credits that can offset that $2,112. So the first thing it does, it says, do you have any child tax credit or credit for other dependents? Child tax credit's good until you're 17. When I say that means you got to be under 17. So if you turn 17 on December 31st of last year, you don't get it. You move into the other one, credit for other dependents. The child tax credit of that $2,000 has $600 that's called non-refundable. In other words, if I need that to offset that $2,112, it's going to take $600 from each of my kids because they're both under 17. And it's going to say, okay, we're going to apply $1,200 against that $2,112. Oh, by the way, I'm also working, and I'm putting the kids in daycare. I get a portion of that. I'm going to school. I get a portion of that to apply. I am giving money to my 401, And if I can take a maximum credit of $200, so 10%. So if I'm given $1,000, I'm going to get a $100 credit that can be applied to that tax liability. And again, I've not even looked at my refundable credits. So that $2,000 credit is a great example of a non-refundable / refundable. They call it additional child tax credit. My $2,600 is used if I need it for my tax liability to pay off this $2,112. That $1,400 can either go pay it off or come to me. That's refundable. The education credit for college, the one that's good for the first 4 years, American Opportunity, goes for what I owe or it comes to me. And then I had withheld, it totaled up to $2,500. I paid it off with credits. I paid the $2,112 off with credits. I get all my $2,500 back. And that's how you see the big refund build. Now, we have clients that know how this works, and they will do zero withholding because they know the credits are coming back. And I try to train people that when you see somebody with a kid who's 16 this year, you got to let them know. Try to remember to let them know that they're not going to have that credit next year. When you see they're 18, and I just do this because I'm gabbing with people. It's like, what year? Is he in high school? Yeah, as a senior, he's going to graduate. What's he going to do next year? Not sure. Okay, I just want you to know that at 19, different things affect if you can claim that child, okay? Or he has to claim himself. Okay? But if he's going to school full time, you can still claim him and you're still eligible for earned income tax credit. But earned income tax credit, if that child doesn't go to school, you can't claim it, you lose it at 19. And again, when I say 19, that means they returned 19 last year. Really, they got to be under it to get it. So page 2 is all those credits coming in, okay? And here's our earned income. And all those forms and credits, when I said they exploded the 1040, all this other stuff, which used to be on the main 1040, are now over here. So here's our adjustments. What do we see at our tax sites? Well, we have teachers coming in. If teachers have expenses more out of their pocket, they can take $250. So out of pocket for their classroom, they can take $250 out. We do see student loan interest deduction, okay, maximum of $2,500. Unemployment compensation, we expect to see a lot of that this year. People trying to start their own little businesses, so we see business income. Schedule 2, I'm not supposed to see that. Sorry, I pulled up the wrong Schedule 2. Here's our non-refundable credits that I was just going through. So yes, non-refundable credit for child and dependent care expenses. It sounds cold, but it's use it or lose it. Education credits, part of it is use it, lose it. Some of it comes back to me. Retirement savings credit contributions. Yeah, you got to use it. And residential energy, you got to use it. And then we have some of the odd ones down here. So when I go through the tax return, which I'm going to go do next, I'm going to show you how all those forms feed the 1040. Any questions yet? When I train people on taxes, they usually say, so I train this class up at the U. It's not only a tax class, and this class comes out for community service. They come out and do taxes, and this one student at the end said, "This was a great class, but that guy," and he points to me, comes in, turns on his fire hose of tax information, and he goes, "But guess what? We all learn how to do it." I said, "Yes, you do." That didn't pop up for me. Oh, good. This is easier. This is a practice lab. Nope, it's not letting me in yet. This is how we train every year. Now let me in. Yes. So here are returns that are in our practice lab. So I'm going to take you through the Franklins. So when I was I remember that. So we had bought a house and had a baby in the same year. So obviously something had to happen with taxes. So we hired somebody to do our taxes. And then we have a friend who's a CPA. So the next year we had her do it. And she found things that the first guy did wrong that were in our advantage. And I'll repeat this again. When I get to the IRS letter, if you don't file forever, for years, and the IRS knows that they owe you money, you'll never get a letter. So when a company sends us a W-2, we have it in our hands, they send one to the IRS. And these IRS letters that come out, they're just comparing the income. They might come out saying you missed a W-2, you missed this, we have this on records, you filed incorrectly, so, the issue with divorced parents, and you took the wrong kid. So they're just sending you a letter saying this has to be fixed. And the worst thing you can do is ignore it. But as we go through tax returns, as I learned about tax returns, so I thought, oh, I have to pay somebody. Well, then things didn't change in my life. In other words, I had the house. I mean, I added a kid, but things hadn't changed. So my tax return itself did not change. And we saw when the 2017 law came in, a lot of people went to, they used to do their own, just said, I want to make sure that I can do it right. And I will tell people, now that we did it for you, this is an easy return to do. Go do it yourself, try it. And you get the reaction, no, I don't want to make a mistake with the IRS, that's fine. But other people are like, yeah, I can do this, that's fine, I can do it. So if nothing's changed in your life, and you start going, well, last year my tax return looked like this, go try it on DIY and see if, and that's free up to 66,000. And go just see, and if the tax returns look the same, guess what? You did it right, because it's just data entry at that point. You were married last year, you're married this year, had 2 kids last year, have 2 kids this year, have the same mortgage, maybe you used standard deduction last year, use it this year. So we'll go through some of those changes, but my point is that tax returns don't change that much because we don't change that much. So if no life event happened last year, you can do your own tax return and have some faith. But I'll make you feel better when I go through that IRS letter. So here are the Franklins. So we get this book and it has problems in it, and we have to pass the problems and go back to this and do our test looking at these problems. But this is their final 1040. But I want to show you how we start a tax return. So before we even get to this step, to get into this, I have to fill in a Social Security number. So I fill it in for the one person, then we come in, and the second step it takes me to is married filed jointly. Now, when I talk about the DIY option on our website, this is the same software, except it'll use an interview process. And when I say an interview process, you're just going to see a list of all the income. You're going to see a list of all kinds of deductions, it's not a list, it walks you through it. So it'll ask you questions about your filing status. And it's really going to do something like take you through this filing status wizard. So we have a book that we can follow that we always bring with us. We have filing status wizard, or gee, I was married last year, I'm still married this year. And we're going to hit continue. And then the first page of anything, the intake sheet we use at the Sorensen site, is your information. So you can see that zeros if you can, that there's a 00, that we know that this is a fake Social Security. We have the birth date. There is a credit if a taxpayer is blind. Deceased gives you another, it's like there's a status called qualifying widower. People wish to contribute $3 to the presidential election campaign fund. At our sites, we never ask that because you just get into, let's say, discussions about current, past, future presidents. And then we have Carly, fill in the same information for her. We're filling in the address. We're filling in a phone number that we use. The IRS will never use this. IRS will never email. IRS will never call. I saw one in January. I'll start seeing them again, all the scams, and it always starts usually with a phone call. And IRS does not do it. IRS sends a letter out, and the letter kind of looks the same all the time. So this is in case we have a reject and we have to call you, okay? And when we talk about EIP and recovery rebate, one of the problems we have in Utah is, well, I'll give you two examples. So I went in and checked on my rebate. I hadn't filed the 2019 tax return yet, and I know they were holding back some of that rebate in case, because they expect you to file a return. But I'm finishing up my tax return, and I got fat fingers. I'm not a good typer. And I print it out, and I do it, and my wife's looking at it, and she goes, "Why do we live in Clearfield?" Because our zip code was 84105, and I put 84115. Didn't change anything, didn't reject it. Doesn't matter. The IRS doesn't care. Still have the same address, just have a different zip code. So I went and checked on my EIP, and I put in 105, and I don't exist. I go, that's right. So I went and got my tax return. I remember that I put in 115 because we were joking about it. So Utah is known for its east and west and souths and norths and all that kind of stuff. So we would have people that would put in 100N and 300E, and on their tax return, it was 100 north and 300 east. So we knew for a while that you had to be exactly. And I think they softened that. It was a tough one at the beginning. So here's my basic information. Nothing shady there. I will say that we see rejects when I talk about my fat fingers. If the name doesn't match, the last name doesn't match the birth date. Okay. And we have to be careful because America is the only country that I know of, there might be others, that does its birth date, month, day, year. So if we have somebody who their English is a second language, or just talking to them, they're from another country. And if I see 6/8/1980, I always say, so June 8th. And most of the time they're going, yes, they learn our system. Sometimes you go, oh no, it's August 6th. Oh, let's fix that. Okay. And the name must match a social. So for you newlyweds out there, yes, my social security says Carly Rioja, and but I married, what's his name, Harris Franklin. So my last name's Franklin. Did you change your social? No, not yet. Then we have to have Rioja in there. Okay. So we hit continue. And of course, you can always go back and forth. So now we've done filing status, marriage, filed joint. We've done personal information. Then we're going to have dependents. And that's that file. This is this interview. And dependents, guess what? We're going to do the same thing. I'm going to hit edit because I already put these in. It's going to ask you for their name, their birth date, and their social. And be careful that, it auto-fills the last name. So if the kids have a different last name, were they a U.S. citizen, U.S. national, resident alien? You just click yes, your relationship, and then it automatically puts in 12 months. Okay. If they were with you less than 12 months, just be accurate, but it does have a comment. If you were born last year, you put in 12 months. Okay, these things on the bottom are, my child's 19. Well, you don't know if you can claim him if he makes more than $4,300. So is he a full-time student? Click yes, okay, you can claim him. It's 27, he's disabled. Yes, you can claim him. This child's not your dependent, divorce situation. You're not claiming him for earned income credit purposes, divorce situation. Never did this, check if this dependent is married. Again, if they're over 19 and make that, you cannot claim them, 4,300. Multiple support declaration, couldn't even tell you what that is. We don't see it. I don't bother with things I don't see. And then it lets you add another one, so we added Christina. Now, there's a question that came up about recovery rebate, and you can see I have an edit on all these things, but I want to talk about IRS identity protection PIN. Up to this year, if the IRS had a reason to suspect that you are a victim of theft through something in the Treasury, which is usually for us a tax return, they will tell you that they're giving you a PIN. And giving you that PIN, you have to use that every year, and it's kind of simple. We got 4 people on the return. You could get a PIN for all 4 or each of these 4 people. It comes out, it's postmarked January 1st. It's like first thing that comes out in the mail, January 1st. And if you don't have it, your return's not going to be accepted until you put that PIN in. And fortunately, because the PIN is, they should have had this fixed sooner. For some reason, that PIN process of reclaiming one seems to go down every year. So it gets better. But the change they've made is you don't have to wait for the IRS to think you've had identity theft. You can go in and have, you can apply for this on your own. So if you want to just safeguard against future identity theft, I'll tell you a great one, a classic. So every year we see people who the spouses don't get along after a divorce. And for whatever reason, I am a guy, I will say, but the guys do this. I don't think I've ever run into a woman doing it. The guy takes all the kids. Now, sometimes they take the wrong kid. They have two kids and they just, what year am I taking this one? You're taking that one. But we have the guy taking the kid. He doesn't have a right to. When the spouse comes in and does her returns, she will get a reject. We'll know in 5 minutes, 10 minutes. This return is rejected because these Social Security numbers have been used on a previous return. We call her, they know the story. So now we have to deal, like, how do we get that money for her? The kids are living with mom. She's the one who's supposed to get the money. Maybe just for the one kid, but he took both kids. And that's something that takes about 3 months to get them through. They have to write the IRS, send in a paper return, write the IRS why they have a right to claim the kids. The IRS now, in the last 2 years, sends something back saying, prove that they live with you. How do you do that? They go to school with you in your area. Well, that can be in the same as the dad's area. Give me some doctor bills. Give me a gas bill that you live here. Maybe a note from the school. Like it just throws all these things out, and you're hoping it's accepted. Now, they won't try to get the money back from the ex before they give it to you. They'll watch him in the future. But I had a person 3 years ago, first day the tax site came in, claimed his son. It was rejected, and I call him up and I said, I knew what it was going on. It said, if it's whatever son's name was, Tommy has an IP PIN, identity protection PIN. You must place this PIN into the return before we can accept it. I called him up. He was surprised. I said, so you're not aware of the PIN? Well, I don't think I am. Well, just call your wife and she'll give it to you. And I knew I was not going to hear from that guy again. And I didn't, because his wife, ex, had put a PIN on the kid because this guy was playing that game before, taking the kid, coming in the first day, getting credit for him. So I'm like, wow, I would do that for a lot of clients that I see. If you can get an IRS identity protection PIN, it's easy to put into your return. Go do it. Okay. Recovery rebate, EIP. This is on different software. It's going to look differently, but this is it. We have 2 places we can put it on this system. But here it is. My spouse and I received a stimulus payment during the first round of payments of $2,900. So what does that mean? $1,200 for him, $1,200 for her, $500 for the oldest kid. But they had a baby born last year. So they're going to get another $500 for her. Okay, this is where it's reconciled. Now, at Christmas time, we said, oh, we're going to do this again. So they got $600 for dad, $600 for mom, $600 for the kid. But they have a baby born again. So they get $600 for her now on this return. So off to the side, there's a green AGI, federal refund, state refund. Before we put in any income on this problem, we had a federal refund of $1,100 for that baby. So if you're not in the system, if you didn't get what you're supposed to get, you put that number in here and the refund amount's going to show up and you'll get it as part of your refund based on IRS verification. They also know what you got last year. There are issues with this. My brother lived with me and my sister last year. He's the one that worked. He got all the money, but we were all living together. He's not with us anymore. What happened to our second round? He got it. He got all 1,800. You guys friends with him? Yeah. Think you can talk to him and see if you can get that? Yep. What do I do this year? I don't have any income. You come into a site or you do this, you only have to really go this far. There's more steps, but you're going to be hitting continue because once you put this in, You don't have to put in anything else. So we have a woman that called. She goes, I'm on welfare. She's not on a federal system. When I say federal, I'm on the 4 different kinds of social. I'm on VA. I have a tax return in there. They know about me. They know where I am. They have information on me, a bank account, address, things like that. They've been dealing with me. But on welfare, it's a state benefit. And she's not on any federal benefits. So we said, yeah, we can just do this return for you up to this point. We know, we tax preparers know what we can skip down the road. But this is where you get your recovery rebate. And you can see there's a box down here. We did not receive any. Now, the one thing I don't have an answer for, and I don't know why it's not more prominent, the first go around, you were not eligible as a couple if one of you had an ITIN. You had to have a Social Security card. That's the same thing that affects the earned income tax credit. Don't know why they made that same rule. So on channel 4 here, they had a couple. Mom and dad worked in a restaurant. The restaurant shut down. Mom had a Social Security card. 3 daughters had a Social Security card. Dad had an ITIN. They weren't eligible. And I thought that would just like kind of get a lot of people's attention. They've made this second one where that dad having what's called an ITIN. Like, we know you're here, but you don't have a full Social Security card, even though you pay taxes, if I can get on my soapbox. So that family of Social Security card owning people can get it. I just don't know if it goes back to the last one. And I think that's going to be true for the next one. Okay. So there's still an iffy issue in there. I'm hoping it's retro. I didn't understand it when it came out that way. So if I hit continue, in the interview process, it's going to say these are the most popular types of income. And it'll take you, they'll pick up a few here that are new. I'm sorry, that are more prominent. Of course, we're going to have a W-2. They might have a 1099-R, that SSA, Social Security. So they're going to make you figure all this stuff out. It interviews you and takes you through this step by step. A new form this year is NEC. 1099 miscellaneous has now been split into NEC and miscellaneous. When you're a contract employee, you do not pay taxes. Excuse me. And if you usually miscellaneous is if you have your business, and NEC is a contract employee. So that's the main reason they made this new form. The form almost looks the same as a 1099 miscellaneous, doesn't change anything. But on these forms, you're going to be paying 15.4% of your Social Security, what we call FICA, payroll tax, Social Security and Medicare. When you come to a tax return, this is where you pay it. This is why some people don't think they don't have to pay taxes. But the IRS looks at these and they say, if you make more than $600 in either one of those, we want to talk to you. They'll send you a letter eventually. So it's a new form, doesn't really change anything, but it just, if you made $10,000, yeah, you're going to be paying $1,500 in your Social Security and FICA taxes. And when you're young, that Medicare, Social Security stuff is so far out there. I don't want to hear about it. I don't want to pay it. And it even has less common income. And when we look at less common, that has a whole list of things. Gambling winnings, income are not reported anywhere else. Cancellation of debt. Those are the ones we usually see, cancellation of debt and gambling. So we say income, we put in a couple W-2s for them. Now it's talking about adjustments. They have a student loan interest deduction, and that's where you put it. And it's a real simple thing to put in. That's just the amount. You're not putting in who owns it, who you're paying it off to. So that's my income minus my adjustments is going to equal my income. My income minus my standard deduction is my taxable income. You want to know your taxable income. After adjustments, we have our credits. Now, I'm talking non-refundable, refundable. I threw out 5 or 6 credits. If we fill out our W-2s correctly, we fill out our 1098-T, which comes from colleges, correctly, we fill out all our forms correctly. And if there's something on that form from the employer, the college, whatever, make sure it goes on this form. There is room for it. So if we transfer every bit of data to the tax layer form or TurboTax form, it will work out, okay? So on this one, we have that recovery rebate credit I already did for you. We have an education credit in here. We hit continue. So $300, something else new, CARES Act. So you could not declare money, donations, unless you itemized. And I talked about that itemized opportunities can be cut in half. That we saw 430,000, we're seeing 205,000 people. And at our sites, we're hardly seeing it at all. So they came back, and I'm sure it's because charities are gone. Our contributions have gone down. So this is cash contributions only. And it's simply, did you make any cash contributions? You put yes. Continue. Charity name and description and date of donation. And we'll put various in here because nobody's going to give it to one. Various, date of donation. We can put various in there. If you notice that VARIOU, that spells various. Description, you can put whatever you want in there. Amount donated 300. You don't have to put that in for everything. And the other way to do it is just to override. So two ways. Okay, I donated up to 300, but it has to be cash. And if you ever itemized, or when you think of charitable donations, we always think of what we're giving to DI. So this is all cash. And that's where you put it. And again, every software will have that. So we have other taxes, doesn't apply for most of us. Payments and estimates. The one we see is maybe somebody paid something off early. Like I was in debt and I don't want to, so I started paying $100 every quarter. Continue. Miscellaneous. Here's another place to put in that IRS identification theft PIN. I'll talk about the installment agreement request later. We can do W-7s. It's easier to do a W-7 application and send the whole thing in by paper, or send the form W-7 in early and just send the return in electronically. It's something they haven't straightened out yet. And that's your application for an ITIN. Something maybe doesn't apply to this group, but when people come in and they're remarried, they'll be I want to do married files separately. And if they have kids, it's going to hurt them. They lose a lot of those credits that I've been talking about. So you want to do an injured spouse. Injured spouses. I got married, remarried, and I have all this debt. My wife doesn't want her refund to be impacted by it. Now, she won't get it all back, and we still got to pay it off, but she'll get some refund. The IRS won't take it all, but it's because of my debt, my child support, my college I'm behind on. I owe the IRS. It won't take it all. Families have to live. Okay, and essentially, don't worry about that. Health insurance, yes. If you have it through the marketplace, there's a page you have to fill out for that. This is all health insurance. So we end up with this tax return I started with. Okay, so everything I filled out comes to the 1040 and all those different schedules. Now there's a whole bunch of stuff on our site that's beyond this, okay? That's not true when you're doing a DIY. You'll have a couple more things to fill out. Where do we put the bank account for your direct deposit? Oh, you want a paper, a check? Again, we don't like that, but if you do that, it'll take you back and say, verify that address. This is your return. Even if we're doing it for you, it's your return. So we finish with that. So again, I've learned that my taxes aren't that complicated anymore. I encourage you to try it, but you have the Sorensen site. If you're in Salt Lake, you can put in any county on our site and find out what's available. Unfortunately, with COVID, it might not be close by. Okay, so let me talk about an IRS letter. Mackenzie mentioned her $30,000 mistake. I had mentioned I think it was a $2,000 mistake by the time they got to me. It was a $3,000 mistake because of interest and penalties. But that was after 3 years, so it went up. The worst thing you can do is not respond to these letters. Okay, again, it's not an audit. They looked at what you got, and they looked at what they got, and there's a mix. I have a woman's information here on my desk where they applied her 2019 Morgan Stanley fund to 2017 return and saying, you owe us this much money. And I called the taxpayer advocate, which is a local Salt Lake group. They're associated, they're downtown. And they said, don't worry about it. It's either fraud or they just messed up. And she hasn't gotten a letter, so I let it go. She didn't get a letter. But we responded to it. So what I was trying to find is a letter that had the full letter, because it's different fonts. You see this normal print, then you have the dark font. You have the dark font up here. And off to the side over here on a real letter, and I don't know if it's italics or light gray, it says failure to act could mean that we essentially says we take everything you own. We're taking your children, we're taking your car. And the thing is, they just want a response. That's all they want. And it's going to come from Ogden, Texas, Cincinnati, or Philadelphia. Just call them and say, what do you need? What's going on? They go, and I think the most boring job in the world, they're going to be on that end saying, yeah, we're looking at your return, give us your social. Yeah, it looks like you did this. Well, I never had that job. How do I prove I didn't have that job? Or, oh, I did forget it. And we see people at our website, at our summer site going, you guys forgot this. We're going, yeah, we probably didn't. But yes, okay, we forgot to put that W-2 in. Let's put it in now. And the letter always says, if you agree with us, just pay it by now. But people want to talk to us. There's a taxpayer office downtown. They are trying not to have people come in. So they're much more open with what they can share on the phone with you. And there's a taxpayer advocate. They're paid by the IRS, they work for you. And it sounds kind of limited when you call them what they can do. But if you are in financial stress of some sort, so I had a young lady I got to fill out my FAFSA. Yes, that's something they'll take. Yeah, I'm a family of 4 and I'm missing, $6,000. They will take that kind of stuff on. So just when you're listening to their options, go, I don't think they're for me. Yes, they are. It's free. It's always leave a message and they'll get back to you. Okay. So I'm just saying, respond to these letters. I had a client who had that 1099 miscellaneous. She was a language translator. She made $25,000 a year, left every year owing $4,000. She goes, I can't afford that. I knew she couldn't afford it. She showed up at a different site. I was there on April 15th. I started the return. All of a sudden, look, I said, I saw what she did. And I go, I know you. She goes, yeah, you used to do my return. And she pulled out her IRS letters. How much is my couch worth? How much is my car worth? So she was at that scary point. I was new enough as a volunteer. I didn't know how the IRS worked in the back end. She would be considered currently not collectible. There is an income limit based on family size that the IRS, you still have to jump through all the hoops. Same thing if you have a big medical bill that you can't pay, you still have to do all the paperwork with that hospital before they're going to forgive medical debt or reduce it. Same thing with the IRS. You still have to reach out to them. You still have to fill out forms. They're going to look, they're going to check, they're going to question, you're going to get tired of the forms. That's fine, just do it. And then they're going to say, you are currently not collectible. What you owe doesn't go away, but you are not collectible. And I think now for a single person, it's right around $35,000. They know you have to live. They see rents going up. They see food prices going up. They know you have to live. So it stays there. And then one day you fill out a tax return and you're above 35,000 and you get an IRS letter. And yes, that debt is going up because of interest and penalty. So you don't get out of it. It's not like, hey, we're going to treat you nicely. We're just going to put you in the system, but we're not going to send you a letter every month. The letters that come out, this one that I have up on the screen says you owe us 114. To the next letter on the same day, it does come out on the same day, will come out on, so that at the bottom it says August 26th, very small print. So it'll come out September 26th. And it'll say 114, and it'll have a little interest amount, a little penalty amount. It'll come out October 26, November 26. After 6 months, the letters start getting a little bit more serious. But it's just to generate a response. Same thing for the Utah State Tax Commission, just to generate a response. So last thing I have is, I hope I pulled up the right site. Okay. There are changes that nobody's playing with, and I don't even know if we are at VITA. We haven't had the request yet. And I have some tax geeks that will do this. But some people have heard about this. If I have a business I can take my FICA payroll taxes and push them out over 3 years. So my first third is due in this December, the next third that December, next third. AARP just came in and flat out said, we are not even touching this. It's a one-off. It's only for 1 year. Let somebody else play with it. Go see a paid preparer to do it right. The forms are available, but I have to be honest with you. If I don't know if you keep up on why you would keep up on this stuff. IRS did not start accepting returns until February 12th, which is last Friday. They were still not accepting them until Friday night. There are still some groups that cannot send in tax returns. Why are they 2 weeks late? Longer than 2 weeks late. They usually start accepting the last week of January, because we took everyone in the IRS and said, go work on the EIPC, Recovery Rebate Project. And they come back to this, quick catch up and take all these tax law changes. So it's an 8915 form. It's called, everything has a number, the IRS. But a lot of people just aren't, I'm not going to worry about it because it's going to go away next year. It's a one-off. So we could advise, some of the people could advise, some of the people are going to give you a blank look. But what we have, this is small, the American Opportunity Credit changes. So we've had the American Opportunity Credit is for the first 4 years of school. It used to be called the Hope Credit. Now we're just saying we're going to call it the American Opportunity. We've been calling it that for 4 years. Retirement account changes. If you have people that retire, they had to take out, I think, 4% of their account once they hit 70.5. Now that's 72. You can also give more to your account. If you're under 59.5, and you took money out for COVID-related expenses, we can get rid of that 10% penalty. So if I take 59, so pre-tax dollars that were never taxed go into my 401. I take them out, they're going to be taxed. If my income's taxed at 15%, that's going to be taxed at 15%. The state taxes 5%, it's going to be taxed at 5%. But if I'm under 59.5, I also get another 10% tax. We can get rid of that if it was needed for COVID related. Actually, you can get rid of it if you need it for education or medical. If you took out money out of your retirement plan, loans that were due or delayed, again, we don't see these at our sites. We'll see that I took my money out early, but not these other issues. And the maximum contribution have all increased by 500. Here's the standard deductions that have changed. Tax rates have changed. I mentioned the bottom's 10%. Just so you know about tax rates, they go up by a tenth. So it's going to climb slowly from 10 to 12 in this range here. I had a question from a buddy. I guess he was in a tax argument. He said, "Is it only the stuff that you're taxed over 400,000 that will get a higher tax?" And I said, yes. 399,000 gets taxed at one rate. Once you get over 400,000, it goes at another rate. And that's what you kind of see here. So your tax rate might be 11%. Someone else might be 12.1. It's not this pure number. We have that $300 I mentioned. W-4. I haven't looked at this. They're saying they made it easier. They made a mess of it 3 years ago. It used to be so easy. And this NEC. Long-term care premium deduction changes, alternative minimum, we don't see an alternative minimum. Energy efficient credit. So they used to have everything. I got a new door, it's energy efficient. Well, every door is energy efficient. So now it's more for the solar water heater, solar panels, fuel cells, wind turbines. So they make that it's been coming down a lot, and they've reduced what you can get that for. So we'll see 1 out of, 500 with that on there. And that's it. You have seen taxes. Was it worse? Do you understand less?
That you are the tax slayer. You were on that website, Greg, but you really are the tax slayer. I learned a lot. There's a lot of good information there.
Well, I know you're on the call. I was going through it earlier. I've gotten questions, and I can answer questions. It might not be as quick as I answered the one person the other week, but if you guys are having clients for the AA or the Fair Credit people, please just send them my way. Okay.
Perfect.
There's also at Utah Tax Help. There's 2 of us that watch Tax Help Utah. Change the name. There's also a contact us on that site. But you can, we don't see serious questions. We'll see fears. And we also have a summer site somewhere. We had it here in the office last year. Usually we have it at Sorensen, Unity Center. We are open until people stop showing up, like make appointments and stop showing up. So you get something in the summer, you never got around to filing, you haven't filed for 3 years, we do old years, anything like that. We don't want you to be shy. We know who to refer you to if we can't handle it. We try to help you as much as we can. Yeah, during the summer, I think most I did was 10 years for somebody. So we get you through it. We can get you through it. We don't want to see you with 10 years during tax time, but after tax time, we'll see you with 10 years.
That's fair enough there. There was a question in the chat. What's the best way to get in contact with you if there are more questions?
Yeah, again, if there's that Tax Help Utah, contact us. It's a new website. I mean, if you go, our old website was Utah Tax Help. And we're in the VITA world, it's kind of neat because we ask permission, but everyone's so kind, you just steal. I call it stealing with permission. So if you went to Tax Help Colorado, Tax Help New Mexico, we look like them, even in color. So when we did this, they can get us through Tax Help Utah, but if they type in the old site or it comes up, Utah Tax Help, it should direct you to our new site. Or I would say for those that are with Fair Credit, a couple of you have my email and just contact me directly. Or just send the questions. So I think it was Lucia sent me a whole bunch of questions. I don't know, when I say a whole bunch, 5 or 6. I was able to spit out the answers kind of quick. And if the clients can use Tax Help Utah, that would be great. Again, we have more people doing that. So of course, things are crazy with COVID around here. So, we do what we can when we can.
That's perfect. Thank you. So again, Tax Help Utah.
Yeah.
.org.
.org.
Perfect. Great. What other questions? We'll open it up for the last couple minutes. Are there any other questions that you folks might have?
Any EIP questions? I don't know if I can answer all them, but. Again, if you're not in the system, this is how you get into it. And one last thing, doesn't have to be the last thing. I mentioned that 65,000 people in Utah that were eligible for EIP didn't get it. And we opened up an EIP site in the office here because, again, everything was shut down. We had it at the Salt Lake Library for a bit and until we re-shut down. And we probably, through phone or talking to people getting enrolled, we got 500 people. So 65,000. Now, my thing is I want to do tax returns for families because I want them to get EITC. Right? And we miss every year 60,000 people who are eligible for EITC. So Venn diagramming this thing, it has to be the same community of people. They're not in the system. So we talk about why people why they don't collect it. And there's an odd, I don't know, paradox, conundrum, whatever you want to call it, but I don't legally have to file. When I had that standard deduction up there, and for let me look at that numbers. If I'm head of household, I'm that one person, I put 30,000 income in, my standard deduction is $18,650. If I earned $18,000, I don't have to legally file because I'm under that standard deduction. It's going to be 18,000 minus 18,650. No income, don't have to file. I am sitting at home 24/7 just stressed about finances. You took a big headache off my thank you. I don't have to file. When I talk about that MESA and the sweet spot for EITC for a single parent with 2 kids, that MESA, that best, the cream of the crop, I don't know what you want to call it, the best money starts at 10,000 and starts going down after 19. We have just taken that, the best part of EITC for a single parent and told them they don't have to file, never saying, but you're going to get I think it's $5,280 for that EITC. Oh, by the way, you have 2 kids. You don't need it for the non-refundable part. You're getting another $2,800. You're making $18,000. Could you use $8,000? Heck yeah, I could. So I don't know if that's the community. We have tried over the years, and many states have tried a lot of outreach. So we are trying something new. Finally, I have a decent paper that in California, from California, they tried everything, nothing was working. So their conclusion is they have to hear about this from trusted people, which would be Fair Credit, which would be low-income health clinics, because the doc's sitting there, which could be a VITA person, but a lot of it's their friend, maybe a religious, a teacher. So we're going out attacking this issue, trying to make a dent into this group through those groups right now. But boy, if I can find what the key is of those 60,000 people, I can die then. I'll be happy. But that's a lot of money. $60 million we're leaving on the table every year in Utah. And we know that gets spent. That's my soapbox.
Well, that's a great message, and I'll just echo Greg's words and what Mackenzie shared today is, let's tackle these taxes. There's opportunity to get a return, and there is resources out there for you. And so let me go ahead and share our screen one more time, just to show our contact information. And if you do have questions for Greg, for us, you can reach us via social media, through email, giving our office a call, and we can get you connected with Greg, with VITA, and Tax Help Utah for that relief. So if there are no questions at this time, we want to thank again Greg for his time today and in coaching us on how to tackle taxes. Want to thank Mackenzie for what she shared today, and again, thank you for your attendance. So stay safe out there, folks. Again, thank you for your time, and hopefully we'll hear from you soon.
Great. Bye, everyone.